I'm Mark Davis of B&W News, reporting from the Denver Gold Group annual conference in Denver. And I'm here today with Chad Williams, the president of Victoria Gold. Chad, how are you doing today?
Very good, thank you.
Good to hear that. First off, Chad, what would you suggest would be the key value drivers for your company's share price over the next few months?
Okay, between now and year end, we'll be releasing exploration results from a property in the Yukon called Eagle. We'll be releasing exploration results from a property in Nevada called Santa Fe. And other drivers will be seeking and hopefully receiving permits in the fourth quarter to go underground at a property called Cove. And so I think those, in addition to perhaps some other items that we'll announce between now and year end, should help our share price pretty dramatically.
And the Eagle project would probably be your flagship project, is that correct?
Well, in fact, analysts ascribe about 50% of the asset value to Eagle and 50% to our Cove property. And I would share with that analysis. I think each asset is equally valued for us. Interestingly enough, they're very different in the sense that Cove will be a high-grade underground mine and Eagle will be a lower-grade open pit mine. But what they do share is that they each have lowest quartile total cash costs by North American standards. So they both will have very robust economics.
And what type of numbers are we looking at?
Well, and these are not our numbers. These are numbers that come from Scott Wilson, Roscoe Paulson and Associates, or independent consultant. And these studies are very fresh. These studies came out at the beginning of this year. Each study indicated that, again, the cash costs are attractive. At Cove, on average, $427 per ounce, and at Eagle, $500 per ounce over the mine life. Good for us is that each asset will have high grades, higher than average grades at the beginning, which should translate into even lower costs in the first 2-3 years of mine life, which obviously helps drive the economics even greater.
Okay. And with so much on the go, what is your working capital situation like at this time?
We currently have about $40 million of working capital. We have no debt. We just closed a $27 million financing. It was oversubscribed, and we had some very significant institutions that participated. Sun Valley Gold is one that's publicly disclosed that they're now over 10% shareholder. We're very happy and proud of that fact. Kinross Gold also came in and was a very substantial participant in that fundraising. Kinross now owns 19.99% of Victoria. So it was a successful fundraising, and we also got some very good shareholders to participate.
And finally, Chad, are any other key points or developments that would interest investors?
Well, our story is a simple one. We're focused only on gold. Our assets are all located in very good jurisdictions, Nevada and the Yukon. We have a market value today of about $300 million. And, our business model is very simple. As we advance our assets, we add value to those assets. We commissioned successful, positive, independent economic studies. We are now seeking permits. Once we get those permits, we should get a positive re-rating. And once we start developing those assets, we should even get a further re-rating. We plan to be a 250,000 ounce per year producer with our existing asset base. It will take us some time. That's over the next 2-3 years. Incidentally, starting production next year, but modest production next year. But as we ramp up to that level of 250,000 ounces or more, we should get a very, very substantial positive re-rating. In fact, potentially 4 or 5, even as high as 10 times, even in a flat gold price environment, if we can deliver and hit the milestones that we think we can deliver on.
Okay. Victoria Gold, it's a company whose star is definitely rising. So I wish you, Chad, continued success.
Thank you.
Thank you very much indeed.